Hello, hello. Happy Sunday. It's the 14th of June. It's been 2 weeks since I put out a video explaining my macro outlook for Bitcoin and crypto, and what my plans were going forward in this bear market to try and position ourselves for the bull market. So just thought I'd come along and give a little update because we have had some movement since the video came out. So let's get to it. So the video I put out 2 weeks ago was here on the 31st of May, and since I put the video out, even if we take from the bottom of the candle, that was like a 20% move to the downside. Very nice. We like to see it. So we've now tapped this low. I will say I did buy a small bit of Bitcoin here. Nothing really interesting. I do think we're going to come lower, but I figured it's better to get some exposure than to have no exposure if I'm wrong and we don't come lower and we just rocket off to 3,000 million bazillion dollars from here. So I have taken a little bit. I did also take a small position in Crow, which, you know, we're fighting around my entry right now. And I also bought a little bit of Shiba, which is in the green. Might come down and retest this now as support to then continue higher. That's what we would hope for anyway. Otherwise we're going to come down and that's going to be in the red as well. But they're only small positions, starter positions, because like I say, I could be wrong. We could continue up from here. So it's better to be safe than sorry and have some exposure, in my opinion. So one of the reasons that tapping this low is so important is what it does to our structure. So on the monthly time frame, our structure was down, up, down, and there was our break to the downside. So that means that our high is all the way up at the all-time high, and to break bullish again, we would have had to, wherever we stopped, we would have had to retrace all the way back up and break the all-time high for a higher high to then look for a lower low, a higher low, to then continue off, which isn't really ideal. Now, however, that we've touched that low and we've got these two consecutive candles here, that's our new monthly structure. So our new monthly high is at 85k, and it's the same deal on the weekly. Our weekly high was at 100k before we tapped this low. So to break bullish even on the weekly time frame, we would have had to break above here to then come down and get some sort of retest to make a higher low, which is not not as easy as when you've only got to break 82 for both the weekly and the monthly to flip bullish. That's not to say that this is necessarily the low and we're going to break this high from here, but it is something that we should be aware of, and it is a possibility that this is the low. I don't think it is, but it could be. So that's worth noting. Big change in the structure, definitely an important sign. Even if we continue down into this 3-day order block, or even if we continue down lower, you know, it's a lot easier to get from 45k or 40k to 83k to flip the structure bullish than it is to get to 125 to 126k. So very, very important and very worth noting. So on the macro, what am I looking for now? So what I think is likely to happen from here is that we come up and put in a lower high somewhere and then continue down either into this 3-day order block or lower. That's what I'm kind of looking for. See if we get, yeah, so I mean something like that into the golden pocket 786 area, and some sort of rejection there would be really nice to then continue and see where this bear market truly ends. Another possibility is just that we don't get any further pullback from this and maybe we literally top out around where we are somewhere and continue lower. I'm considering the possibility of this be in the range of, we could come down into the 3-day order block and get some sort of one, two, three tap, some sort of accumulation, either a model 1 with 3 consecutive sweeps or a model 2 with a higher low after the second sweep, to then come back into the range. Some sort of accumulation in the 3-day order block would be nice, to then get our expansion to the upside, looking to break out of this range, which would then mean that we have flipped our structure bullish. So this is kind of my preferred scenario if we are going to be bullish from here. I think this is my favorite way for us to do it. If this 3-day order block fails, like I say, looking down at the 786, 886 pocket that I went over in the previous video between the 30 and 40k levels. Other than that, I don't really have much of a macro outlook unless this continues and touches this high or continues lower from where it is. There's nothing further on the macro to do, so it's just with the small bags that I bought from here, sit and wait, and we wait and we sit and we see what happens. If I am wrong and this does turn out to be the low and this comes up and breaks that high, no biggie at all. Wherever this tops out, we'll probably do a little bit of the old fib retracement and say, okay, we'll probably come down and put a higher low in here, so I'll then look to buy there. Wouldn't end up being as big a position as I'd want. I won't put as much money in if I'm buying at a golden pocket up at 70k as I would down low, but for an investing spot bag, I think that's probably my plans going forward. Hope you've got some value from this. If you have any questions, comments, ulterior analysis, please let me know, and thank you for watching. Take care.